The average move, 76%. The investment thesis for high tech and biotech gets better and better as each day major firms lift their targets on the growth leaders. But there could be more stock winners if central banks move ahead with another round of accommodation, which could even mean the Bank of England going to negative rates. For more on this and the market and maybe the catalyst, I want to bring in the all-stars. Kaufbaum Capital Management President Gary Kaufbaum, Bulltick Capital Markets Chief Strategist Kathryn Rooney Vera, and Rosecliff founder Mike Murphy. All right, so before we get into all the factors that are really playing a part in this market, let's start with earnings. We're in the beginning of earnings season. And Gary, outside of Goldman, the banks have been a dud. Overall, I think earnings this season are going to move markets big time, but so far, not yet. What are your thoughts?
Well, we just started out, and leave no doubt there's going to be some huge winners, but there's also going to be losers. My job with my staff is to sit around before the market, after the market, and go through these numbers and look for companies like last couple of quarters, a name like Zoom that absolutely destroyed what the consensus was, and the stock made gargantuan moves to the upside. So we're going to get a bunch of that in the next 3-4 weeks, and I'm just going to be watching for companies that are doubling and tripling their business every year because there's such strong demand, and stay away from those that are not doing well. And unfortunately, because of the pandemic, we already know about cruise lines that still aren't going to cruise into November, and just stick with what's working well, and it's been the NASDAQ.
You know, to that point, Zoom had great numbers. They took market share where a rival like Slack's work as a symbol did not. So it was easy to discern the winners, hence the momentum. And that's how you pick stocks. Kathryn, though, going into it, there is anticipation that you know, the numbers are going to be great, but they have to be great, right, to justify this rally.
They do have to be great. Fundamentals at the end of the day do have to justify prices. That's what the PE ratio is all about. We have to get earnings to justify the numerator, the price. So that's where we're at now. And what I'm looking at right now is two sectors, industrials and materials, because I think that the stimulus round number 4 is in the offing. It's coming in, I think, as soon as early 2021. It doesn't matter who wins the presidency. That is coming. That's what has taken us to current highs, and that's what's going to continue to do so, because under neither administration, either Republican or Democrat, want to see a retracement in either the economy or in the markets.
Absolutely. And by the way, only 3 S&P sectors are up right now: energy, and to your point, materials and industrials. Kevin, how are you seeing this earnings season shaking out?
Hey, Charles, good to see you. It's Mike, but that's okay. I'll answer to anything.
Oh, I'm sorry.
You know,
how do you see it, earnings season shaking out, Mike?
So, you know, the earnings are coming in solid, but I think a mistake that some investors are making is trying to look for bargains, trying to go looking at places like energy or like the financials that just really haven't performed right now. I think for the people watching at home, the best thing they can be doing is looking at big tech, where we've seen the growth, where we continue to see growth, and any sort of pullbacks you get in the Microsofts, the Apples. If you see a pullback in those names, you can put money to work in them. Otherwise, let them run until they stop working, because right now they're working and they're the gift that keeps on giving.
You know, I love that you said that, Mike, and the fact of the matter is, you know, a lot of people are grappling with whether to chase the hot names or to try to predict when the not so hot names are going to turn around. And you've done extraordinarily well with this, Mike. You've been bullish on those names. You've done very well with them. But Gary, you have as well. And you know, so what about people who are looking? Should they still be overweight, perhaps, in tech and communication stocks?
That's where the growth is. Look, growth stocks cut through the mustard, cuts through the downtrends, cuts through a worsening economy because they're doing things right. I tend to, you know, I use the term, I invest in greatness. You find me the restaurant chain where people are lined up around the block. Find me this computer chip that's going into everything. My new thought process is the electric vehicle business, I think, is just being born right now. So I'm looking at chips for that as well as that type of business. I'm always looking for those category killers, and there's always around because we're always growing. There are people inventing these new wondrous technologies as well as medicine and things like that, and that's where I park my car at all times.
You know, it's so funny you mentioned that. So NIO, which is a Chinese electric vehicle stock,
Yeah.
in the last 52 weeks, it was a $1 stock. Today it's up 24%. It's trading at $27. I've got subscribers in it, but I wish I'd stayed in it at 3. And Kathryn, again, this gets us back. Now, I know you like the industrials and materials, and I think there's a lot of validity there. I'm overweight there too, but when does an investor not invest into these sort of story areas when now you see real money going in there?
Yeah, I think when you see that broadening out, as we began to see the very beginnings of a broadening out of just technology and into the other sectors that have dragged substantially, I think that's still the phenomenon that's going on. If you continue to see monetary and fiscal stimuli, then you're going to see price appreciation. Fundamentals, which is earnings, of course, have to be there. But when you're faced with a Fed that's buying high yield bonds and will continue to do so in the event of a flagging economy or flagging markets, then I think you still want to be invested. And as I've contended ad nauseum, I think investors need to have a barbell strategy. I think you need to be long risk assets, especially in the equity markets, and hedge yourself with gold or tips or private equity or low correlated assets, just to be able to maintain a defensive position if and when, and I know you don't agree with me, Charles, but if and when we do see insurgent inflation, which I think can come in the realm of 18 to 24 months.
Okay. So let's pick up on that, because 18 to 24 months is a long time for a lot of our viewers, and we could make a lot of money there. We talked about earnings being the mother's milk of this market, but there's something else. And Kathryn and Gary, I know how you feel about it. I want to get Mike's take on it. The Bank of England just now polling a lot of banks, and they're trying to get their reaction to if they go to negative interest rates. If that happens, Mike, what happens with this market? Already several European countries at negative rates already.
Yeah, I think it's just really more stimulus for the market. It's really more reason to be investing in equities. I talk to a lot of friends who run very large, what were credit funds, multi-billion-dollar funds that are really now credit in name only. They're coming into equities to chase yield. So as rates go lower or go negative, I think you're just going to see more money coming into the market. And that's one of the bold thesis that I have on this market, is that as more and more money comes in, it's going to chase the high growth names. It's going to go to where they've seen returns. We're going to see more money coming into the market. So it's a good thing.
All right, my friend Gary has a hashtag called Easy Money. Let me, we're running out of time. I do want to get to this headline I saw on Bloomberg yesterday about investors turning skeptical about a U.S. Democrat blue wave. And I thought to myself, I never modeled my own portfolio or my subscribers for a blue wave. Gary, are you modeling for a blue wave outcome for this election?
No, look, if Biden wins, the market will decide where it wants to go. You can think about, oh, maybe managed care is not going to do well, or this may do well, the green energy. I'm going to let the market decide depending on who wins. So I'm not worried about it at this juncture. What I will be worried about is policy. If he puts in his nightmarish tax plan, which destroys anybody trying to become wealthy, then we'll be thinking about things, but not until then.
Yeah, it's so funny. If they think there's inequality now, wait until you tax it so middle-class people can't get rich. Guys, we got to leave it there. Gary, Kathryn, and Mike, thank you very much. Always appreciate it. Fantastic conversation.